Today we will see what are the 20 business checklists that I go through before investing in any company. This is the checklist that I have developed with several years of experience and investing in many companies. So keep watching. Assalamu alaikum and welcome to my channel. I am Shabbir Bhimani and I like to learn to invest in the market. In the process, I become a better investor and share the same on my blog and now on my YouTube channel. If you want to be an informed investor in the market, let's start this journey with a disclaimer. I generally tend to avoid any names of the company, but if I am sharing any name, it is just to put my point forward. None of them is an investment recommendation and you should consult a financial advisor. Checklist number 1, simple business model. So any company that I want to be investing in, I should be able to understand the business. It should be plain and simple without much of a complications. I am not from a finance background, so if there are any complications or there are many companies into one, I generally tend to avoid such companies. Checklist number 2, management pedigree. If I'm investing in a company, I see it as an investing in a team. So the team that I'm investing in should have a clean background. I generally do a Google search about the name of the promoters with scam or reviews or any court cases pending, things like those before investing in a company. Checklist number 3, management experience. So the company that I'm willing to invest in should have an experience of doing the same business for at least 4 to 5 years. They should not be new in the business. Checklist number 4, entry barriers to business. So how the company is using the technology to create entry barriers. What are the data that they are using to build moat around their business? How they have an edge once a big competitor is trying to enter the market. Checklist number 5, the pricing power of the business. If a business wants to earn money by selling something, it should be able to pass on the price hikes to its customers. As an example, people wait in a line to buy an Apple phone, but once you are booking a ticket online in an airline, you generally tend to sort by price and opt for the lowest one, provided all the other facilities remaining the same. Checklist number 6, no regulation on profit. So there are certain sectors in the market where we Indians have certain regulations. So oil as an example, tobacco as an example, these are the sectors where government has a regulation on the profit that the company makes. So I generally tend to avoid them. Checklist number 7, the important path is growth, but what is more important is runway for growth. So for how many years the company can keep on growing at a brisk pace. So if the growth is higher, I generally tend to like the companies. Checklist number 8, sales growth, but more importantly the cash flow. I will give you an example. A company can be setting up many distributors and it can have sales growth. So if I'm giving my product to my distributors, they may be it may be showing us sales, but what is more important is actual customers buying the product. So cash flow is more important than sales growth, because sales growth can be tricked but cash flows cannot be tricked. So I prefer companies having say 70 to 80% of the sales coming as cash flows. Checklist number 9, the debt in the company. We have seen in the previous video that debt is an important aspect to consider when investing. It is not a critical aspect but still an important aspect. So I look into how the company will be able to serve the debt, what is the return on capital it is able to generate, and how the company is planning to become debt free in a very short period of time. Checklist number 10, operational efficiency. What is the current operating profit margin for the company, how the company is trying to better that going forward, and what is the operational profit margin they tend to go for. So let's say a company is at operational profit margin of 10% and they plan to go to 20%, how they are planning their operational efficiencies, dealing with the distributors, suppliers, and handling the day-to-day activities of the business to become a better in operations. Checklist number 11, PSU are an avoid for me because they don't operate very efficiently. The aim of a PSU is not to become the best in operations or have an efficiency in operations. So I generally tend to avoid PSUs. Checklist number 12, sector leader or market share. How the company has a market leadership in its own small segment and how the company is trying to grow its segment or sector. Checklist number 13, the unlucky 13, sector disruptors or business threats. So, how the sector is being disrupted by a new technology or a new player or a new entrant, and what are the threats to the current business. So, there can be a technological enhancement that can disrupt the whole sector. USB drive is a big example where it disrupted the whole CD as a sector, and there are many sectors in the EV ecosystem that we can see right now that may disrupt the old existing sectors as a whole. Checklist number 14, loss making subsidiary. So if there is a company where a subsidiary is making a loss, then why it is making a loss, what are the plans for what are the plans of the company to turn it profitable, and how the company is disclosing the loss making subsidiaries in its annual reports. Checklist number 15, what is the salary of key managerial person? What are they on the percentage of sales, or they are being paid a hefty amount just like that? Checklist number 16, near term capex plans. So how the company is planning to do the expansion, what is the cash requirement for the same, how the company is planning to raise the cash. Will it be through the profits, internal accruals, debt, equity dilution, etc. Checklist number 70, avoid sunset sectors. So as an example, paper as a sector is going out of business. So more and more use of technology means less and less use of paper. Though the use of paper is still growing at a nominal pace, but it is still, one can say, it is still a sunsetting industry. Newspaper also can be a good example of a sunsetting industry. Similarly, I think credit card is also one of the sunsetting industry because UPI and buy now pay later has made sure that we tend to avoid using credit cards. The main use of credit card is to buy now and then pay at later stage, but it has very high interest rate. Buy now pay later as a sector is disrupting the credit card industry. So you can buy right now and then pay later in parts, and yet you don't need to pay the hefty interest that a credit card normally charges. Checklist number 18, I don't believe in turnaround. So if a company is about to turn things around, I would like to wait and then say consistently for 3 to 5 years it has proved its mettle and then it has turned around, then only I invest. I don't invest in a hope that it will turn around, but only invest if there is an actual turnaround in the figures. Checklist number 19, promoter holding and pledging. So company may not be taking up the debt, but the promoter may be taking up the debt in its personal capacity by pledging of shares. So I generally tend to avoid if there is a huge pledge by a promoter. The last and the final in the list, checklist number 20, related party transactions. So how the company is doing transactions among the related parties, what is the disclosure they are sharing, and how the company is making sure that all the related party transactions are disclosed with its shareholders. Finally, I have to ask, which of these points do you consider when investing? Share them in comments below.